Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to take a look at some of the crazy returns you could have earned if you invested in these EV companies back in March. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are looking at some of the crazy returns that came from some of the hottest EV stocks this year, as we found this really interesting article from pennystocks.com that shares what $500 invested in 7 electric vehicle penny stocks back in March is worth right now. So we are going to take a look at each of these companies, what they do, and what their stock has done this year. Then share the crazy returns that you would receive if you had been invested in them. Now, the reason I want to share this topic with you guys today is we have really seen it be quite the year here in 2020 as far as SPACs and EV companies coming to market. Now, a lot of people have made a lot of money on some of these newer EV companies in the last year, so it continues to create a lot of hype and excitement as these newer EV companies come to market. With that being said, there is no denying that FOMO, fear of missing out, has driven short-term trends in these lesser-known names, and those who invested early on are now reaping the benefits. But before we continue, we need to acknowledge that these stocks carry huge amounts of risks. The EV stocks detailed below are all volatile like penny stocks, so if you are looking for ways to trade these names or make money with penny stocks, it's important to control your downside. So yes, the gains that we are about to show you are absolutely fantastic, but they are not a realistic expectation for all of your investments. And you should always be trying to chase the best gains possible, but do so with reasonable expectations and make sure you're managing your risk exposure at the same time. There are still a lot of great opportunities out there to get into some of these EV related companies early on, but not all of them are going to be guaranteed winners like these have been. Okay, now with all of that being said, just before we jump into these EV companies and their returns, this is just your friendly reminder that if you like today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, make sure to check out the link down below in our description. Right now, Webull is giving away 4 free stocks for signing up and funding your account, so make sure to check them out. All right, now let's get into these 7 EV stocks. Now, some are a bit lesser known, but others are pretty big names like NIO and Workhorse. Now, the first company we are going to start with is Kandi Technologies Group. Kandi Technologies is one of the newer names in the space. In 2013, the company and Geely Group, a Chinese automaker, jointly invested in the establishment of Fengsheng Automotive Technology Group in order to develop, manufacture, and sell pure EV products. Earlier this year, Fengsheng introduced its first pure electric SUV, the Maple 30X. Fast forward to today, and Kandi has established dealer partnerships for the launch of its 2 affordable EVs. Trading under the ticker KNDI, their shares have rallied almost 180% in the last 2 weeks, nearly getting back to their all-time high of $17.40 from July 30th. Right now, they are trading at $12.64 per share. So if you had invested $500 into Kandi back in March, you would have gotten about 230 shares. Fast forward to today, that would now be worth $3,000 for a nice 560% return. Second on our list today is Electramechanica Vehicles. Now, Electramechanica's flagship is a single-passenger EV dubbed the Solo. The company has been working toward commercialization and building its U.S. footprint, with its first round of new retail locations just announced at the end of October, and the initial shipment of Solo EVs just arriving in North America. Now, their Solo vehicle is quite unique, and their CEO, Paul Rivera, said they're not trying to compete with Tesla. When you're driving this vehicle, it is just you, and you are focused on the road. With commercial launch imminent and momentum as a backdrop, Solo shares have surged in the recent weeks. Trading under the ticker SOLO, their current share price is up 20% just today at $11.54. So your $500 investment in March would have gotten you roughly 555 shares of Solo, which today would get you about $5,405 for a nice 900% return. Third on our list is Blink Charging. The company continues gaining exposure as its charging stations remain a hot topic among traders and customers alike. Not only has BLNK focused on expanding its charging footprint, but the company has also benefited from other industry news. Apple, for example, announced earlier this year that its Apple Maps would include EV charge routing. According to BLNK, that will include its charging stations. Last week, BLNK introduced a cable management solution for new and existing EV charger locations. Trading under the ticker BLNK, they reached a new all-time high on Thursday, breaking through $19 for the first time. They are now trading at $23.14 per share. So a $500 investment would have gotten you about 312 shares of BLNK. Now today, that would be worth a nice $5,720 for over an 1,100% return. Fourth on our list today is Arrow Inc. Arrow initially focused on manufacturing short-haul electric vehicles, such as things that drive around college campuses and office complexes. But the company's recent deal with Karma Automotive forms a partnership that includes a plan to produce more than 20,000 light-duty trucks over the next 3 years. It's also reportedly worth as much as $300 million. While Arrow is still one of the lower-priced EV stocks, shares have been equally explosive and are currently trading just above $9. Back in March, your $500 investment would have gotten you 1,250 shares of Arrow, which would now be a nice $7,700 or a 1,540% return. Fifth up is Green Power Motors. Now, Green Power was originally listed on the TSX market and traded in the US on the OTC market under the symbol GPVRF. After filing for a $35 million IPO on the NASDAQ, Green Power began trading under GP, the symbol it's known for today. Now, the company manufactures electric buses, cargo delivery vehicles, shuttles, and transit vehicles. Green Power recently closed a deal for 6 electric school buses that were sold to Thermalito Union Elementary School through Green Power's national distributor, Creative Bus Sales. While GP reached $23.45 earlier this year, the former penny stock currently trades around $19, recently getting up to $21.41 per share. Now, back in mid-March, when Green Power was still on the OTC market, the penny stock was worth around $1.05, meaning your $500 investment would have gotten you about 476 shares, which today would now be worth $9,000 for a 1,700% return. And now, number 6 on our list is a popular favorite, and that is Workhorse Group. Now, this electric vehicle penny stock originally was brought to life by a Trump tweet last summer. The company specializes in medium-duty trucks with powertrain components under the Workhorse chassis brand. Most recently, Workhorse caught a lot of momentum after receiving a purchase order for 500 all-electric C1000 delivery vehicles from Pritchard Companies. Some of the momentum had been stifled following news that Ford Motor Company would be rolling out its electric cargo vehicle. And of course, we know there's a lot of excitement and anticipation surrounding the USPS contract for them as well. Needless to say, it hasn't been a bad year for the former penny stock. In mid-March, shares were trading around $1.50, and at its peak, Workhorse reached highs of $30.99. Currently, we're sitting at $24.92 per share. So your $500 investment would have gotten you 333 shares of Workhorse. And today, that would be worth about $7,580 for a 1,400% return. And last, but very much so not least, is NIO. And they are the popular Chinese EV automaker known for their electric SUVs, but will be branching out into different sedan models to continue to compete with Tesla. Now, last year, NIO was a penny stock, at one point trading as low as $1.19. Though it didn't experience a massive sell-off like most of the market did in the first quarter, shares of NIO were hovering around $2.30 in mid-March. But in light of the company's recent earnings beat and all the buzz surrounding them, NIO is now at $49.35 per share. So $500 in NIO would have had you at about 217 shares. And today, that would be worth roughly $10,500 for over a 2,000% return on your investment. So across the board, those are some fantastic returns for all of those EV market related companies. And these types of gains continue to have people extremely excited about the EV market as a whole. And there are still a lot of new companies coming to market at these affordable prices. But that does not mean that all of them are going to have that same trajectory for fantastic growth. So if you are looking to get into one of these newer EV companies on the block and are hoping for gains like this, my best advice is just to make sure that you are doing your due diligence. Research these companies, understand your entry and exit points, and try not to get greedy. Now, if you were one of those who were lucky to get in on these companies early, I would love to hear what type of growth you've seen in your investment. So make sure to leave your thoughts down below in the comments. I'd also love to hear your thoughts on some of the newer EV companies we're seeing come to market and which ones are your favorite. Always love hearing from you guys, so please make sure to leave a comment. And just a reminder that these videos are in no way a recommendation to buy or sell any specific stocks, and any trades should only be made after your own research and due diligence. If you made it all the way to the end of the video here, you better give us a big thumbs up and make sure you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.